Okay, we should be live now. Good evening, everybody. If you could let us know in the chat if audio and video are good to go. And if they are, fantastic, we'll get started. Hello, Duck.
Hey.
And if you can hear Donald as well, that would be a good
Hopefully,
indicator as
right?
well. Yeah, it'd be a bit one-sided if it weren't the case.
Looks like we've had that before.
We have had that before. Dude, I used all of my best Casual Friday jokes on that one live stream opening, and they didn't hear a single one of them. Absolutely. What a waste, right?
And I was like laughing to myself. I was like, what the fuck is
weirdest start ever, right?
Yep.
So first things first, welcome to Casual Friday. Looking at the price chart, there's a decent chance you've got nothing better to do. Pubs and restaurants and stuff only open here tomorrow from 6 a.m, shockingly, but tomorrow nonetheless. So we are your replacement entertainment, if you will, until then. Secondly, thank you to our sponsors, Bybit, for supporting Technical Roundup. Their links are available in the description. Even clicking them helps us. I think we get 0.001 cents per click last time I checked, Donald. So I mean, we could use all the coins we can get on that front. That's a joke. And last thing, well, third thing in the intro, if you could go ahead and leave a like on the video, that helps us a lot. And a big thank you to those who helped us get past the 6,000 subscriber. I don't know what a subscriber is. Could be a Russian thing. Landmark. That's really cool. And let's just keep growing and putting out good content on this channel. So that's all the intro stuff done. How are you doing, Duck?
Good. How are you?
Yeah, man. Pretty decent. Pretty decent. I think, again, Casual Fridays, as the tone implies, like to keep it fairly casual, bounce off the chat, you know, see what you guys want to talk about. If you have any questions, requests, favorite karaoke songs, all of that type of stuff, we can do our best to entertain. I think just to kind of set the scene, we can do a bit of very quick, although there really isn't much, Bitcoin and Ethereum roundup, if you will. Kind of a couple minutes each, very quickly, just to make sure no one's missing anything. And then we can talk about some of the topics in the title, and we can bounce off any questions in the chat, etc, etc. So I'll get started with that. I don't disagree with Donald's conclusion of the monthly close, that ironically it was to some extent inconclusive, right? It's hard to derive any very strong views when price just kind of closes at the level above it and then at the level below it. However you want to delineate this kind of 90 to 100 area, if we're being very specific and technical about it. And this is one thing that Donald and I actually tend to disagree on more than other topics, I think it's fair to say. Kind of the significance of ambiguous candle closes. Do you think that's fair? That we kind of not clash heads, but certainly disagree, which is fine on that type of stuff. Whereas, you know, for Donald, it's evidence of like impulsiveness, like a very clean break or close or something obvious needs to be there, whereas I tend to be a bit more picky and say, well, the close, you know, the very fact that it closed above or below is significant, and try to derive a bias from there. I'd say it kind of just sometimes works, sometimes doesn't, for both directions, right? Sometimes I look like an idiot, sometimes you look like you've missed something obvious. I don't think there's a clear kind of winner there. If we're taking that type of approach, then just looking at the candle closes around 90, 100, you could just say it's chop at the level, and the lower time frame price action is certainly supportive of that. If you want to be a bit more surgical, then you could say that we had a close above the level when it was acting as support. The month then closed below the level when it failed to act as support, having spiked previous month's high. And so that level is once again expected to act as resistance on the monthly time frame. Again, doesn't mean it has to be perfect, just resistance on the monthly time frame. And it's currently being retested early July. So that's kind of the monthly time frame. In terms of where's support, I think a lot of stuff lines up in the kind of mid 7K region. If we want to use this highest close here, I think that lands at about 7,500. You could be more conservative, more aggressive, but I think short-term trouble area for me at this level, given we spiked previous month's high, closed below the level. At the very least, I like to take it one level at a time and look at previous month's low, which is like 8,100. That's the monthly. The weekly, there's really not much. I tend to agree with Donald that a kind of grindy bit of price action into an area of support around 8.6, 8.7 isn't the most bearish thing in the world, but I don't want to draw any terribly firm conclusions from how the price action has been, especially this week. You can see we've pretty much just had an inside week really not much going on yet. And I say yet as if there's so many days left in the week. This is Casual Friday after all, so kind of running out of time in that regard. And then, as you can see, just basic support. That one's for you, Dale. Support resistance type of stuff. 8600 is where the confluence in the range is. But yeah, not too much weight on the weekly. And then the daily time frame, we can actually add back some of our levels. As I said, and again, you can always go back and watch our previous videos. That's where the detailed breakdown is. And that's where you can see where the levels come from and us talk about it, etc., etc. For me, market structure is still currently bearish on the daily time frame, which means it's making lower highs and lower lows. We have this kind of pivot or confluence or big area, important box, whatever you want to call it, at 9300, which is our daily range, mean, midpoint, and then the monthly level we talked about as well. You can see that area is currently acting as resistance, but also the daily level from our last live stream, which was on Monday, has been acting as support as well. So if we're in for a low volatility weekend, this would kind of be the range we're in. Support 9k basically, and resistance 9.2, 9.3. That wouldn't be too unreasonable. In terms of bigger picture, again, we'll talk about this more on Monday, trying to be brief because it's Casual Friday. The highest I would be comfortable with this going and still remain bearish in one form or another is 9500, which is where this kind of high, higher high, and then essentially fake out formed, that retraced the whole move and then made a lower low. So for me, the highest or the last area of resistance that I think is significant or offers some sort of bearish continuation is 9500. Anything higher than that, I think, is shifting more towards the short squeeze area. So that's Bitcoin for me. Again, much more detailed on Monday, but in a nutshell, support 9k, resistance 9.3-ish, and that might be our near future range. Any strong views? Do you want to start presenting as well, Duck?
Oh, I can do that, yeah. Let me quickly try if that works. Okay, do let me know.
Oh my god, that's disgusting. Is that a midget? No, you're fine, bro. It's your main monitor.
Oh shit. Had me scared there for a second. Yeah, for me, like I talked on Wednesday about this. So what we've pretty much been doing for Bitcoin, it's been fake out after fake out after fake out. So breakouts to the upside that end up being rejected and then playing to the downside. And I was talking on Wednesday about this having being a fake out as well, but to the upside this time is a possibility. But we were at confluent resistance. That's what I talked about on Wednesday. It's kind of played out that way, that the confluent resistance just kind of acted as it should have, and we moved down. But still, nothing too terrible, right? This could just be the higher low before it gets back into the range. But as long as it doesn't, I think it's bearish. But if it does, I think the moment it starts trading back above 9250, it's probably gonna go all the way to 9540, and
yeah,
then
that's the area I've got as well.
I think it's just going higher. I think the moment it reclaims this, it goes higher. Reason being, one, you have this ascending triangle that everyone kept talking about before it broke. Now no one talks about it anymore, right? So the story goes. If that kind of gets reclaimed, you have a lot of people off sides in here, and you also have the same thing with range, right? We've had a range, had the breakout to the upside that played up bearishly, and then this would just be the fake out to the downside into move higher. So I think the moment we start trading above 9250 on a closing basis, or in general, with a strong move, I'd expect higher and then into the 10Ks again. And I mean, if this wants to move at any point, I think that would be it. In general, breakout.
Yeah, I was gonna ask, is that your kind of volatility trigger event? That instead it's not just gonna be a reclaim and fine, we're back in the range, nothing important, but that will be your kind of signal that things might pick up?
Yeah, I think the moment it starts getting back into the range, I think volatility is gonna come in, because I think it's gonna run and it's probably gonna take out the highs just because 10.5 has been standing for so long. We've tested it so many times. But I think like if this is the fake breakout to the downside, I think that's gonna be the fake breakout to the upside, and then we go much lower.
Yeah.
So either this goes lower and then I think it goes higher, or it goes higher and then lower. So
Nice.
bulls.
Thanks.
Yeah, but I mean it's
No,
actually
I
like,
understand. Yeah.
it's actually like quite the clear path to take. I think
Yeah.
like if it reclaims, I'm gonna long it and then heavily short above 10.5, and I think that's gonna like legitimately go down really really hard. But if the opposite happens, if it goes down, I think that's a really really good long. So I think like the bulls actually want this to break down, or at least like the bull in me wants this to break down, and the bear in me wants it to go up. So take that as you will, but I think that's gonna be the case. Like up and then we go down, or down and then we go up.
You made the chat very happy there, as you can imagine, with with your style of commentary. No, I mean I don't really disagree. I think the joint conclusion, if there can be such a thing, is that sellers have like a fairly limited area in which to make or continue making their case, which kind of gets capped around 94, 9500, right? The top
Yeah.
of your range, and I've got a market structure level there as well. Same thing. So anything higher or any acceptance of 9500 is kind of $1,000 candle territory, right?
Yeah.
That's
Agreed.
kind of the summary version. So a bunch of very very well humored people, up then down, then all of that type of stuff. I've tweeted about this kind of stuff before. That certainly my trading system ends up being, I mean, with the except, there's directional bias to it and there's certain nuances, but when it comes to actually positioning at these levels, I have an expectation of what's going to happen because I think the level is important, right? And then if that doesn't happen, like if I have a good bearish setup and that fails to play out, that in itself is significantly bullish, right?
Yeah.
And then the other way it works as well. So my argument that 9.3 at a stretch, kind of 9.4, 9.5 is really the last. Almost shouldn't be getting there if the market's bearish. So if that's not where it's going to turn around, then I'm going to long for $1,000 squeeze candle. If that sounds like up, up, down, haha, convenient to you, then I guess we just disagree with regards
Yeah.
to how I'm speaking and articulating myself. But I mean, I understand to some extent. And again, I wish my system were that simple that I could just say, yes, it's going down, and then when it goes up, I'm just like left with egg on my face, or vice versa. But I'm only sharing what works for me, and it's usually a bit more nuanced. One of the things that I certainly look at, as you know, when it comes to directional bias, is where are the best setups, and are they playing out? Right? So if a really good bearish setup isn't playing out, or it's stalling, or it's really, taking its time, that in itself for me is significant, as opposed to just waiting to get invalidated type of thing. There's a good question saying, Don, can you explain why if we go up, you expect nuke, and if we go down, you're bullish? I guess that's an interesting, it's like almost an anti-continuation type of thing. I think a lot of people, this is just based on Twitter, there's an expectation that whatever big move comes next, it's going to be the trending move or the trend forming move, right? Whereas at least within this range, your view seems to be that the big move that takes place, or at least the early portion of it, is for fading. And there are a few questions in the chat to that effect. Do you want to just clarify for us what you mean?
I mean, the thing is, we've moved up from 3.5 to 10, right? There's not been any pullback. Like, you can't call this a pullback. It's just a range at the top of the move, right? I mean, if it's the top of the move, we don't even know yet, right? But in general, these kind of moves, in my experience in Bitcoin, like, you can't really short these moves because they just grind up forever. But the moment you can short them is probably like it's the last moment to short them actually. Like for example, in these moves, like when we had this move, and I don't know if it's like entirely clear what I mean, but I'll try my best. We've had this kind of breakout happen, right, at 10K back in the day. And then we had a quick move down, and then you had one more chance to short it, and then it was just gone. And I think it's pretty much the same thing here, where you have like a lengthy consolidation, which like if this is reaccumulation and you think the market and like the entire like world, I guess, is ready to go to 20K, I mean, you can play it that way. I just don't think it's reasonable for like the current kind of like in what kind of shape the entire planet is in, and in general, like in what kind of shape crypto is in, because I can kind of feel how much, how many people are in the market, how much retail interest is there, how much, like at least like a little bit, how much institutional interest is in there, and I don't think it's enough to take it to 20K, right? But if this is just, if we just take off and then start like trading above 11, 12 and actually maintain that kind of move, I think it would have to go there, and I don't think it's ready for that yet. So I think like to the upside, there's limited space. But I mean, you could be completely wrong on that, right? I mean, this is all just me guessing, like based on my experience. But I think there's limited space in the short term, just based on this move having been so sharp. Like the move up has been so sharp, and I don't think it makes much sense for it to just go back to 20K just straight away. So for me, I'm just gonna play it like if it goes back up there, I'm gonna look for short to the downside and then start longing like around 6K again and see if it then takes out 20K. But I don't think it's just going to be a straight walk in the park for bulls. And it's never been that way with Bitcoin. Like if you buy the bottom on Bitcoin, usually like, I mean, you get rewarded really quickly and then you get fucked at some point. And I mean, if you bought this, and I did, you got like you got really really scared here, and I mean that's just usually the case in my experience. So I expect some kind of scary situation to come up again because we just haven't had one yet. Like this has just been straight up bulls winning. um, and I think there's like at the point where we go to like 11, 5, 12, I think there's just going to be too many bulls. And then you're going to get like stupid BitMEX funding again. You're going to everyone just piling in. Um, Something about 10K just makes everyone think that way. Like the moment you start breaking 10K, everyone just gets irrational and aim for higher, 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 higher. And I think like 12K is a good target to kind of take profit into a lot of people that just gonna FOMO in. But like I said, I mean, it's just me, like based on my experience and like my feel for the market, just trying to make sense of it, and that's how I do it.
I think that's a great answer. There are actually lot of people asking that question in terms of why would you fade the next move, right? I think that's a very good explanation. You mentioned like I think there are a couple of disparate, like different levels of support that you mentioned. Should that kind of drop happen, there's like 6K, 7K kind of round number sort of stuff. Where do you really see? Because obviously some levels, not all levels are trend reversing, right? Like some supports, you'd say yeah, it could bounce here, but I ultimately think X marks the spot.
Yeah.
And others, that type of approach. For you, in terms of really kind of good high time frame trend reversing levels as opposed to a piddly bounce, what do you kind of see? Because I remember when 6K broke down, there was a lot of interest, certainly on Twitter or whatever, wanting to buy quickly, like levels below 6K that were reasonably close to that breakdown point, expecting like a very quick reclaim, or just oh, this level's been untested since 2017 and now we finally reached it, like all that type of stuff, right?
Yeah.
So in the current conditions, which again a period of low volatility on even on higher time frames, etc. Any strong views in terms of levels that won't just get completely swatted? Because I think when Bitcoin does trend forming or these really high volatility periods, some technical levels just get completely swallowed, right? Levels that might have been good on lower time frames or in other conditions, they just get completely wiped. And obviously the positions that are taken up at those levels get totally rinsed as well. So where is that for you? Where is the quality structure in your system?
I mean, in my system, it's probably going to be 7K, 7.7, like this area on the weekly. In general, in like how I've traded Bitcoin for a while now, is just that I've been interested in Bitcoin below 6 and then started selling above 6. So I think just based on how much time we've spent in 2018, 6K is just a really, really important level. And I'm always going to looking at Bitcoin once it gets there. So like I'm gonna be buying at 6K, and I mean I'm gonna like long term again, like I did down here and then sold way too early.
Mhm.
And I'm gonna look for trades at 7.7 to the long side. And if that like if 7.7 doesn't work out, I think it's gonna be quick and it's gonna be below 6, like 5.7 or something, like a wick below 6. But I'm not really planning for that yet. I think like 7.7 is a really good level, and I don't think like even if we get to 7.7 and this starts like punishing some over eager bulls again, like if it goes back up, like I think that's gonna bounce at some point. And if it then moves down, then I'm gonna be heavy buy into 6. But I mean, we'll see once we get there. I think 7.7 is a really good level. I mean, I just hope I get it. And then I'm gonna play the bounce, and if the bounce, like it could just go there and then just invert, like do this kind of very ugly inverse head and shoulder thing.
Yeah.
In which case I'd much rather be positioned long. Like I wouldn't want to go into 7.7 short. And I mean that's been the case for me. Like I've shorted a few tops, and I usually, like, I mean, for example, for this 10K move, I usually take profits into that area and then just wait for long. So I think like the more like if you short it below 6K, I think you're doing something wrong. So I'm not gonna short below 6K. It's just one of the rules that I have. Like whenever I feel like shorting below 6K, I just hit myself and I'm like, just don't. I mean, it's just
Slap
stupid.
yourself if you sold Bitcoin below 10K type of thing, just at a
Yeah,
better
but like
price.
6K, yeah, I mean 6K has been so like that's been the case like on this down move too. Like it started breaking 6K, and I was like, okay, I mean Bitcoin below 6K is really cheap in my opinion.
Hmm.
So I'm just gonna short Bitcoin Cash, and that's what I did. And I mean it had a similar move, and then I just heavily started longing down here, and that worked really well. The same thing happened here. I was just like, I just bought spot, was terrified, and then it nuked like 1K below my entry, and I was like, oh shit. But then it went back up, and I think it's gonna be like 6K. If you short below 6K, you get punished. But if you long above 10K, you usually do too. So I mean, those are like the two areas
Hmm.
where you don't want to be like one or the other, I think. And anything close to 6 is good long. Anything like getting stupid, and I think 12K is starting to get stupid, is a good short. Like anything above 10K that gets stupid, and I mean, we all know what Bitcoin does when it gets stupid. Like you get this really, really dumb candle up, and then you get a full reversal like this. I mean, that's something that you can short above
So that's one
10K.
of the arguments against this being some sort of high, right? That reversals, especially on this time frame or just high time frame reversals generally, have been very, I mean, reasonably quick and violent, and
Yeah.
have made their intentions clear in the past, right? Like nice looking candle, and the next week it just gets completely stuffed, engulfed, whatever you want to call it, right?
Mhm.
Do you have any counter arguments or strong views, or just how do you
I mean,
distinguish this consolidation?
the question is a really good one because someone in the chat asked earlier why I would like. I explained that I would kind of fade the like 10.5
Mm-hmm.
breakup, but I didn't explain why I would fade like the move down, and that's pretty much exactly the case. Like
Mm.
it, this doesn't look like a top to me. If it goes up, like if it sharply spikes up and then goes down, that looks like a top to me.
Right.
Um, But given that that doesn't look like a top, and I still think it could go down, I want to be a buyer at support because this doesn't look like a high time frame top to me. So if I get high time frame support, it's probably going to go up.
Mm.
And I mean, I think like if we move down to 7.7 and then have like a strong bounce from there, I think there's a good chance that we start trading and might even like hold above like 10, 11, 12K.
Yeah.
Just based on having actually put in a higher low, having actually punished some of the overeager bulls. And I mean, I'm not saying like there's too many of them. Like this kind of drop has wiped out a lot of the degen bulls,
And a couple of
like,
funds as well.
and a couple of funds, which I mean, sadly go hand in hand sometimes.
Sure.
But yeah, it's kind of like it's never an easy ride up, and I think I mean this hasn't been an easy way up, like ride up, but I still think there's some damage to be done, and the market structure and everything else would just look much better. So I'm hoping for it to go to 7.7 or like that kind of area, so I can long it and then see if it actually holds above 10. But if it rallies, I have a plan for that as well. So that's kind of how I look at it, right? You don't have to always trade. You just have to trade when you think you actually have the odds in your favor. And I think those are two kind of moves that I would have the odds in my favor, either down move into support or like this daily break up that we've been talking about, which is actually really nice because usually you don't get these kind of setups on daily time frames. I mean, you get them, but not like with such a clean picture for the higher time frames as well. Because like this grinding down, it's actually not as bearish as a lot of people seem to think. Could still break down. I mean, we've seen that before, but like I said, then we have a bland follower. But yeah.
Yeah, no, that makes sense to me. So hopefully, hopefully our viewers agree. There's a question from Jeremy, a couple of good ones actually. And again, guys, if you have further Bitcoin stuff, questions, or stuff we disagree on, whatever you want us to discuss, happy to do so. Jeremy asks, and this is somewhat related because the second you present kind of two scenarios or like two things you're looking for, or not even, or two setups, right? I think people often confuse, like, you can draw a level and then you can draw like one arrow flipping it as support and the next arrow flipping it as resistance, and that kind of stuff I'm not a huge fan of. Even if I entertain the idea of being invalidated and there may be a setup if I'm wrong, I will almost always come into a level with a bias, right? I think it's like a specific Twitter tool that you can draw this like line or this box or this structure, and then you can draw like essentially arrows going both ways, and then magically whatever happens, you happen to be on the right side of it. I think in real kind of trading, or at the very least in my experience, it's never that easy. Certainly from a trade execution point of view, and then from an invalidation and kind of subsequent flip point of view, right? Certainly, I know for me, I know I talk a lot about kind of the evidence and what is price doing at the level, is it support, resistance, blah, blah, blah. I get criticized for that a lot, which is whatever. I don't trade your account at the end of the day, I'm trade my own. But even in those scenarios, I'll usually have a high time frame bias from something else, and if I don't, it's not the case that I'll just flip whatever happens, right? More often than not, if I get invalidated, the retest or the flip setup is never, I'm sure you've experienced this as well, right? It's never that easy to say, well, if I get invalidated here, I can just kind of flip long or flip short. It very rarely works that way in my experience. There are a few guys who I've seen do it very well. I think on a swing trading basis, it's way harder to do. Like once you get a high time frame idea invalidated, it's not as easy to just take the next hourly candle and flip, for example, certainly if you're missing out on like a high time frame move. But Jeremy still asks, on that similar type of note, how often do you execute a flip trade where your initial bias is invalidated? Do you find a flip trade difficult to execute? So I can say certainly from my personal experience, out of 10, maybe 2 or 3, kind of depending on the time frame I'm trading and all this sort of stuff. But it's not, I don't find it that easy to execute quote unquote flip trades, because often when I'm doing business at a level or an area, invalidation tends to be, well, it's sometimes just way too violent for me to flip positions, right? Because I'm just like very clearly wrong and the market's now at a level where I don't have a trade, or I'll just get out of a trade and reassess, and then the market shows me that I'm wrong and I don't have like a flip entry. I think it's a bit of a golden goose. SZ is in here, which is a very fitting person because he's one of the few I've seen in the live environment actually do this pretty well. Says depends how you draw it, if there's a clear plan for both sides. I agree. I think having a plan for both sides is totally sensible. I think people take for granted how not easy it may be to actually execute, even if you do have a plan for invalidation, right? So how about you? What do you think? How much do you kind of get into this whole flip trade, kind of I was bullish, I'm invalidated, now I'm bearish, and then taking a trade off of that?
I mean, rarely, and the reason for it being, and I mean, I'm sure a lot of people have experienced that as well. And I mean, I'm definitely not the perfect trader, right? But the reason being why I don't like it too much is because it's an easy way to get like tilted, like really, really hard. Because the worst thing, and I mean, you can see this all over the place, right? Let's say you have like you short, and then you have your stop loss at the high, and then it gets SFP, right? And if you then, I mean, let's say like you shorted somewhere in here, it went down, like you showed it up here, it went down, and then you get invalidated because you thought this was the high already, right?
Mm-hmm.
And I mean, like kind of trading like this is obviously not the best, but I mean, a lot of people do it. So just take that as an
Sure,
example.
sure, that's
And
fine.
then you're invalidated and you're like, okay, I'm just going to long the next bullish setup or whatever that I'm going to get. And I mean, that's even better than like just saying, okay, I'm invalidated. I'm just going to flip the position
Yeah.
because then you long the literal top. But let's say you say, okay, I'm just going to long the next bullish setup that I get, and then you kind of long down here,
Mm-hmm.
and you get chopped out of the trade, and then you're like, okay, I was long, like I was short here, and then got stopped out, and then I was long here and got stopped out. Like, am I the worst trader ever? And for me, it's kind of like if I lose, like if I get stopped out on a trade, I just usually just reassess because I mean I've made a plan like okay, this is how I think this is gonna play out. And if it doesn't, I'm clearly not right, right? I'm not interpreting the market the way I should be,
Mm-hmm.
or like I just can't. Maybe like sometimes you just don't have an idea, right? And it's actually way more often than you would think. Like all these, and I mean, I including myself, right? Like you can, if you only tweet when you're really sure about where price is gonna go, you look like Nostradamus, right? It's
Sure.
like okay, um, you're on a winning streak. You tweet like I don't know, like about price actions 3 times a month, and then those three setups play out, and you look like a genius, and everyone's like, okay, you must have like traded this entire month perfectly, but that's not necessarily the
Agreed.
case, right? I only know like or like I'm reasonably sure about where price is gonna go, like very very rarely. I felt like that at 10K, shorted that, and that worked out. Then I felt that it like felt like it at 7K, shorted that, and we had like a massive up move that stopped me out.
Mm-hmm.
Um, so it's like it happens rarely where I'm like pretty sure where price is gonna go, and it's not always right, but it tends to be right. So I think like if I flip in those positions, I'm already completely off sides. And I mean I could have
Yeah.
flipped here, right? I could have flipped like I got stopped out in the middle of this candle, could have flipped and made some money. Um, but then I would have probably just like rage closed the trade
Yeah.
the moment it kind of retested it and been like, okay, fuck this. I just much rather sit out on the
Same.
sidelines.
I think there's another difficult part, which is if you flip when you're invalidated, you're assuming that your invalidation is actually really pretty significant, right? Which is never
Yeah,
guaranteed. There are a million reasons you can get stopped out of a trade. Sometimes it will just be the top or the bottom, sloppy stop placement. Maybe you stopped out at a level or at a high that you shouldn't have been. So I think a lot of the time, if you blindly flip bias when you're wrong, it's almost giving yourself a bit too much credit in some instances, right? Saying, oh, well, I took the best short available on this chart and it got stopped out, and that means the market is omega bullish and now I'm going to long it, right? That's kind
yeah,
of to some extent, the implicit reasoning when that sort of thing happens. So I think flip trades are cool. As I said, I mean, as Z's in here says, good point, credit. I've seen like very few people, him included, in that small category do that really well in a live environment. But generally, I certainly if you're in the developing trader stage, and you don't have experience in terms of setups being invalidated, and you just don't have the screen time, I personally wouldn't be kind of flip flopping between invalidated, therefore bullish, invalidated, therefore bearish, etc., etc. I think it's actually a lot harder than it may seem, right? Just like
yeah,
executing trades at like high time frame pivots or levels, the reason certain traders make it look easy is because that's literally their whole system, and they're experts and have hundreds and thousands of hours of screen time of that sort of thing. Whereas in reality, when price is just flying into a level and you're watching it ready to take a trade, it's not always easy to make that objective assessment there and then. Do you want to tell us what you're trying to display and draw with your?
it's like you talked about like the like giving to yourself too much credit for like having the perfect
Yeah,
invalidation, and oftentimes, I mean, for me, it happens very rarely that I get stopped out and price doesn't like mega moon. Um,
yeah,
like on a short, for example, or the other way around. And that's based on the fact that I have like wide stop losses
yeah, yeah.
and like a clear invalidation. But I mean, let's be honest, like most people don't trade that way.
Sure.
Most people don't trade the high time frames and stuff, right? So you're gonna have your stop loss tight just because the moves are much smaller, right? And
Yeah.
like I always say, like high time frame stuff tends to not chop you out as much, while like the lower time frame stuff like likes to do it. Because like really, if you're trading the 1 hour time frame, right? Some guy, like some Chinese guy or like some American really rich guy buying can stop you out of your short even though you're completely right. Right? Like let's say you short in here and then you have some guy that's just like, oh, Bitcoin, I like that, and then just buys.
The Saudi sheikhs just
I
hit
mean,
the market buy, and
yeah,
that's it.
I mean,
It's over for
they're
you.
not looking. There's people like there's a lot of people that don't look at the chart or even don't care about like they might buy here, and then push it up, and it goes down 2K, and they're not gonna be worried, right?
Yeah, too busy on the yacht and everything. Yeah.
Yeah, but that's not gonna happen on like the high time frame stuff.
Yeah.
Like it might happen like sometimes, very rarely, but that's gonna be like you would have to be much bigger than like the people that are pretty much swimming in the crypto pond, like the
Sure.
random people. But yeah, so I'm like on the low time frames. I just can't. I agree with your point completely. Where it's like you're giving yourself too much credit.
Mm-hmm.
Like if you're just saying, okay, this has to be it, and if it's not, it's just gonna keep going.
Pack it up. Yeah.
So yeah, and what I just drew up because I found it funny when I looked at the lower time frames is that this is actually something that I talked about on the stream last week. Not last week, last Wednesday.
So 2 days ago, yeah.
Yeah, dude, I've climbed like I don't know 8 or 10 hours today.
Nice.
Like I'm spent, but yeah, we've had this structure over and over and over again. It's kind of funny looking at it. Like I didn't even notice because, like I said, I just got home. But yeah, it's like we're setting a low after breakdown, set an equal or like roughly in the same area low, put in a high, in this case here, and then rate it and go down, right? Same thing has
And trend
happened.
lower in the process, right?
Yeah, and trend lower. So I mean, it's happened here, where you set the high after this kind of move up, like after this second move down.
Mm-hmm.
The high that's set is just rated and then goes down. Same thing here. The high has been set and then it gets rated. Same thing here. The high is set and it goes down. This one hasn't been as strong. We'll see if this just is because it just has another leg in it, or if that's just.
That's an interesting pattern. I didn't notice that.
But yeah, we talked about this on Wednesday. So when I saw it, I was like, oh, maybe I know.
We can always go rewatch. That actually answers Daniel's question. It says, do you guys own the content or is it Bybit's channel? We own the content and the channel, mercifully. So this is our stuff. You know what? The point you made about like, okay, so low time frames, there's more ambiguity because some Saudi Chad can just market buy your stop loss essentially, like all of this type of stuff. And there's more chop and it's just harder. All of that, I don't disagree. But I think a point that isn't talked about enough, and I don't say that in the cringe clickbait type of nobody is talking about this sort of way, but genuinely like a very interesting consideration is swing trading and high time frame trading, or if you want to take a broader term, systems that generate fewer signals over a given period of time. I think to a large extent, being able to trade those is kind of a privileged position to be in, right? Because if you get like, I don't know, let's say one high time frame setup a week. Now I think that's pretty high. I don't get 4 setups a month if I'm purely trading like really strict high time frame stuff, and I don't dabble any of my intraday strategies that are based on high time frame levels, blah blah blah. If I'm purely taking like weekly to weekly or daily to daily setups, maybe one a week, depending on the market. It's been pretty weird recently, but like let's say one a week as a kind of a baseline. That's 4 trades, right? Yeah. And let's say, I don't know, you get like 2-to-1 risk reward and you get a 50% win rate. I mean, you're not the opportunity to actually make money with that type of system unless you then increase your risk like substantially to compensate for the number of trades. The actual opportunities to make a living, if you will, or get something from the market, it's actually quite low. So I always find it really strange, like really common trading advice is like, oh, well, like only take the best setups on like a high time frame, confluence, etc., and they give you like these millions of preconditions about
Mhm.
what needs to take place for you to take a trade, and then you realize that there's maybe two, three, four, maybe five of those a month. You're going to be wrong on, let's say, half of them. It's like, well, how am I supposed to trade full time or make money if those are my limitations, right? So I think to a large extent, this is something we talked about with Jules very slightly, Sal's Tequila, like swing trading versus scalping. I could be completely wrong here, and obviously no one's saying you only have to trade in one way or only trade one asset class with one strategy, etc. But if you're just like purely, okay, well, I'm a Bitcoin swing trader, for example, you probably need to have a pretty decent capital base to do this kind of full time with nothing else, and just take those two, three, four setups a month as a swing trader. What are your thoughts on that?
Yeah, I mean, I agree. But the thing is, in my opinion, a lot of people try to be traders and they really, really shouldn't. I think like
Bro, I said we'd discuss this off stream. God.
no, but like on social media, it's always depicted as trading is really easy, right?
Right.
Um, I'm not a smart man. Um, I for me this is really hard, right? But where it gets easier is for me on the higher time frames, right?
Mm-hmm.
So, or like during a bull market, right? Like when you have like a raging bull market, altcoin bull market. I mean, I traded like back in
Oh, I
17,
remember.
and I mean, I literally didn't sleep for like at least half of this rally up. Like,
Yeah, yeah.
I traded 3 days, slept like a few hours on the next, and then like during these kind of times, everyone can make money. Like, you can be the biggest idiot, and you're still gonna make money.
Mm-hmm.
For me, in times where it just goes sideways, or like in general where it's a little bit harder to trade, I think it's much better to just limit how many trades you take and then
Mm-hmm.
just take the good ones. And I mean, like trading as a profession, you don't like trading the way I do. You could easily do like have a side job,
Yeah.
and I think a lot of people are like, okay, I want to get out of the rats race, whatever.
Hey, welcome
I
to
have
Donald's side job, by the way.
I have like let's say you're like, okay, I'm trading 5K. I'm trying to get out of my job in like a year, and I'm
Yeah.
like just trading that. It's probably not gonna happen, right? Um, I mean, I don't want to like bash on anyone's streams or anything, but like money doesn't come easily, and if it does, it goes away really
Sure.
quickly.
Yeah.
So if you're like, okay, I really want to trade the low time frames, you better be a genius at it. I think like that's my opinion. Like when I
Mm-hmm.
look at Jules, like he's a really, really smart person, right? I'm
Yes.
not smart enough to compete on him on the 5 minute chart. It's just like he got like all these kind of edges. Like, I mean, it's difficult for me. He just makes it look like effortless.
Yeah.
And
Yeah.
and I mean, if you're not like really, really smart or have like really, really good edges, it's probably not for you. And I mean, that's completely fine because you can
Yeah.
actually trade higher time frame stuff with like without being a genius. And I mean, that's what I do, right?
Mm.
And then you just wait till the market picks up, like really goes to incredible like highs or whatever, or you have like an old season or anything like that, and then you go hard at it, maybe take off from work or something.
Yeah.
And I mean, that's always been my position. Like whenever people ask me, and I get this question in real life a lot, because like some people like kind of tell others, like other friends, like what I do for a living. They're like, okay, I want to do this too, and I usually tell them, I mean, you probably shouldn't,
Yeah.
because really, if you're trading the low time frames, and like you said, like the high time frame stuff, you're not gonna get too many trades. Um, so it's like you don't need to do it full time. You can
Mm-hmm.
just do it
Yeah, I
part
think
time.
most people who think they need to trade full time don't. Or if they do, it's usually a system that they probably shouldn't leave their job to trade, right? With the low
Yeah,
time frame stuff. I don't have like really strong views in terms of there are like no low time frame edges over enough time, and it's all kind of
yeah.
noise.
I definitely don't think that. I
Yeah.
think, I mean, there is definitely something there, and I mean, there's edges to be had like all over this market. That's why I traded. Um, it's just that I am not quick enough, and I'm not like for me, it's just it's not my style. I've traded it and I've traded it successfully before, but like over the long term, it's just one. It's not my lifestyle. I wouldn't want
Mm-hmm.
to do that. Like that's just stressful, just sitting on them like on the computer, just managing positions all day. I think, but also it's like there's with every passing day, there's smarter people moving into space. Like people that are way smarter than me, even
Thanks.
like.
I'm joking.
No, I mean, it's just like you have algos moving into space
Yeah.
that are like trading better than a lot of really good traders on the low time frames. But I'm like, I'm not sure if I can compete with those guys over the long term. I'm pretty sure I mean, I've done it like over the years, like over the past few years, successfully, that I can compete with them over the high time frames. And whenever they're
Yeah.
not there, it's easier to do. So for me, it's kind of like, it's not really about, okay, how many trades do I get? Because really, um, if you just get shitty trades, like if you get 10 shitty trades, that's not going to do you any good.
Sure. Yeah.
But if you find an edge on the low time frames and you can consistently milk that, and I've done that before, usually they don't hold long, but I mean, when they do,
You got to up the risk, basically, right? Bet more.
yeah, I mean, I've sat there trading a BitMEX account on various moves. For example, on this one, on the low time frames up because it was so easy to do. You've always had the same patterns repeating, and even like on the very low time frames, it was very very clean. Like in those situations, even more so if you have like a high time frame alignment, sure, go ahead, right? But when there's no edge, or like I don't have an edge, like I don't have to sit there in front of the computer and kind of curse my system
Yeah.
for like, okay, I took 10 trades today, like 6 went against me, 4 went in favor of me. I'm up like a few bucks for the day, and then have that happen 10 days in a row. Like I'd go insane. So I mean, it's not for me, but
Yeah.
then again, like for some people it is, right? Some people
It's like the
that
opposite,
I
right?
know, yeah, they love doing that. They love grinding, and when they find an edge, they grind it till it isn't there anymore.
Yeah.
But like a lot of people, what they just do is they look at the low time frame stuff and they're like, oh, I think this goes up for like just because I think this goes up, or like I think this goes down. And I mean, that's your experience talking, but I think on the low time frames that's really dangerous, just because yeah, your experience, like if you see a pattern and it goes up, like you said, the Saudi, like you said, the Saudi prince could just dump like a few of his Bitcoin
Yeah.
out, or like anyone really. Like it's not really hard to push price like a few bucks up or down. And I mean, if you don't kind of see that stuff coming, which you can't really, or if you don't have that much of an edge that you can kind of avoid those kind of
Yeah.
moves, I mean,
Because that's like what Salsa said, right, during his talk with us, that a large portion of his success comes from not signals being generated to take a trade, but rather signals which kind of tell him what not to do or how defensively or proactively to play a position, which is huge. I know from my personal experience with like pure low time frame trading, I still have space for low time frame trading in the current iteration, if you will, of my system. But even those lower time frame trades are based on higher time frame levels, so it's like a hybrid at best. It's not like I've got like a high time frame swing and then like M15 scalp. It's not like that. It's just subtle things on the higher time frames. But for me, what kind of cooked it to a large extent, and why I weaned off kind of pure lower time frame strategies, is that I kept losing perspective of the higher time frames. And by the time I've taken like, 5, 10, or whatever amount of intraday positions on an asset, and then some crazy kind of face ripping move comes, or I scratch out for the day, and then there's a big trending move, I'd always look back and notice that like it was like the most obvious daily time frame setup, right? And if I just bought this daily level and walked away, I'd be much better off and not paid some crazy amount in fees, right? So, and I think a lot of people lose track of that. Those really focusing on the lower time frames. I think big time frames move big prices, sort of thing, right? You can expect big moves from the higher time frames, and I just know that, and I'm sure if it happened to me, it happens to a lot of people, that if you lose sight of where those weekly, daily, etc. levels are, and just where the market is generally, even the high time frame trend, if you want to use the kind of trade the trend stereotype trading wisdom stuff, it's so easy to get carried away on the lower time frames. And then once the crazy nuke happens or crazy move up and you're completely caught off guard, a quick high time frame review, at least that's what happened to me, kind of showed me that I was an idiot, right? And I think there's something to be said for splitting up swing and scalp accounts. I know a lot of good traders that do that, but then it kind of becomes a different psychological battle where you're kind of managing one side of the market and then you're taking completely opposite positions in the other. I don't have a lot of personal experience with that.
Yeah, I mean, I that's something like a lot of people ask me, like, how do you gain experience if you don't trade a lot? I mean, that's a good way to do it, I think.
Yeah.
Like, let's say you want to be a trader and you have like a trading allocation, right? And then you say, okay, I have 10 Bitcoin on this trading account. What do I do with it, right? If I just swing trade, I mean, there's gonna be like very few setups that I can take, so I want to hone my skills, right? So what you can do is just take like from those 10 or whatever, um, just take a small bit and then try yourself at like the lower time frame stuff. See if you find like setups and edges in general. See how you behave while you're in a trade, because that's really it's one of the harder parts, like knowing like, okay, knowing yourself, right? Knowing, okay, in this situation I tend to close too early or too soon, like too early or too soon, Jesus, too early or too late. I mean, that's something that you can do. I would recommend doing it with actual money, because if you don't do it with actual money, you're just gonna treat it as play money, and then you're just not gonna treat it seriously, but with very little in comparison to anything that you actually have high confidence in. But yeah, I mean, that's a way to do it. I mean, I do that from time to time. Like I've traded with Loomdart. Like Loomdart and I have had competitions against each other on the low time frames, I mean, that's something that you can do. I think that doesn't really hurt, as long as you keep, like, as long as you just don't stare at it all the time.
Yeah.
Like, you can get like a routine going where it's like, okay, every time I wake up, or like every time I go to the computer, I start looking at the big time frame, the high time frame stuff. Like, okay, I'm looking at the monthly now. What do I see? Like, every time you do that, you kind of get an eye, okay, in what area are we? For example, I look at the weekly. I start like my routine, like looking at the time frames. I look at the weekly. I'm like, okay, there's some support there. Like, I could see this rounding out before I actually go to the low time frames, because, like you said, if you just zoom in on the 5 minute, it's easy to, and I mean, it's happened to me before where I'm like very stuck to the low time frames. Like, oh, I've got this market figured out, and then like suddenly it just moves by 500.
The Saudi prince takes your number.
Yeah. And I'm like, where did this come from? And then look at the high time frames. I'm like, okay, this should have been obvious, or like at least an area where I shouldn't have been in the trade.
I think a really good point you made earlier is that, and one I agree with entirely, is that screen time does not replace trading experience at all. It's not even close. And this applies to kind of just TA in general, and just like charting or whatever you want to call like that subcategory of your market tools, for lack of a better term. None of that replaces live experience, where you need to do execution and management, which are probably the most important things, and the two things that don't kind of feature or aren't centerpiece in standard kind of TA approach, right? It's that's why I think, just my kind of personal view, I think that's why a lot of technical, like really TA guys, why they put such an emphasis on, just put your stop to break even. I think it's because they just don't have or don't want to have actual trading experience. And it's much easier to do the TA part of it, you know, draw the line, measure the fib, draw the triangle, whatever, and then say, well, if the trade goes your way, stop loss to break even, and if it doesn't go your way, well, you've got a stop loss to protect your account. That, I think it's almost a product of kind of laziness, and I certainly was caught off guard with the management side of things when I was really confident in my charting and thought that meant I just kind of unlocked the secret to markets. And then, especially on high time frames when this stuff was taking a while to resolve, the trade management, and well, the execution itself was, you know, well different, but then trade management was also just a complete fucking nightmare. So I agree. One way to do that, for those listening, kind of just practical advice or whatever, is paper trading is fine, you know, but someone said back testing. I think back testing works if you have like a very clear, either a very clear set of almost kind of mechanical rules or just a straight up automated strategy, right? I don't like backtesting for traders with a lot of discretion in their system, because you can't backtest for stuff like that. You can't really backtest trade management if you follow discretionary principles. You can't backtest your setups and at least get very like meaningful data from them if your system allows a wide degree of discretion. It just doesn't work. Trust me, I've tried it. I've worked with traders who had similar ideas about like backtesting really price action, whatever TA based discretionary entries. It just doesn't work, because the hardest parts are actually identifying the setups forming in real time, executing on them, and then managing them. Right? So I think the appeal of backtesting or the utility of it is pretty limited in those circumstances. If you're not working on being able to identify your setup in real time, then it's going to be of limited use, in my view. But yeah, going back to the point in terms of how to actually get some practice, even if I'm a swing trader, kind of dabbling in low time frames, it's, as Donald said, I think a small, non-trivial, but again, not more than you can lose, blah blah blah, non-trivial live account is probably the way to go, and it's definitely something that I'd wish I'd done earlier. I don't know about you.
Yeah, I mean, I think it's just the best way to go about it. Not necessarily like, even if you, like, let's say you put some money on it and you lose it all, and you're like, okay, low time frame trading isn't my thing. I mean, you still gained a lot of experience on the
Yeah.
way, right? And I mean, let's say you somehow find an edge while you're doing it. I mean, then of course focus on it, right? And my argument's never the one where I'm like, okay, it's not possible, because it's clearly possible.
Yeah.
There's people that make money with like that kind of
Straight
trading.
up, yeah.
It's just difficult. And I mean, anyone that tells you trading is easy is lying, or like it's just not trading themselves, because it's definitely not easy. I mean, trading is competing with the smartest people in the space, or like in general, like the smartest people, because I mean, you're trading against in crypto against people that do stuff that you're not even like comprehending. Like it's insane, like how smart some people in the space are. And I mean, you always. That's why I'm saying like it's not easy, because if it were easy, everyone would be doing it, and everyone would be getting hilariously rich.
Yeah.
And when it's easy, is when you have like these kind of crazy swings where you can like do some crazy stuff. But then again, it's really even that isn't easy, because figuring out that that's kind of happening isn't easy in itself. Because I mean,
I
let's
mean,
say
even then, you have 40% corrections on the bit that you're looking at, right? I
yeah,
mean,
yeah. So it's like it's gonna be difficult. I mean, that's why I'm saying like it might just not be for everyone.
which is fine as well.
Which is completely fine. But I mean, if you can make it through the learning space, like through the learning kind of years that it takes, I mean, it can be very rewarding. And I think like I really like what I'm doing. It's just it took me like I was very fortunate that I was trading Bitcoin during the run up, because otherwise I would have paid for the experience that I made. In actual money, because like I lost a lot of Bitcoin on this way up, and then gained it back in own coins and lost it back. And I made the mistakes that a lot of you people make. Um, I was just fortunate enough that I was in a raging bull market.
Yeah.
So it's kind of like I made a mistake, I lose a couple of Bitcoin, and you make it back the next day because everything goes up.
Yeah.
And
Yeah.
then, like a week later, you make another stupid mistake, but you're still obviously angry at your mistakes. I
Sure.
still remember where like a good friend of mine and I competed. Like we always send ourselves. Like I sent him screenshots of my portfolio, he sent me screenshots of his, and then we always competed like who could get it higher. And I was always angry when I I remember one day where I woke up and my portfolio had doubled and his had tripled, and I was like, oh fuck.
Yeah.
And I was disappointed the entire day. And I mean, that was just a different time, right? If you, when the market's hard, and I think it's really hard right now. Um, I mean, you just take what you get and take the experience, because when it gets easy again, it's gonna be a different ball game.
Yeah,
And
the thing is, it was like a really good but also really shit environment in which to learn how to trade, right?
yeah,
It was really good in that purely financially, it was quite hard to, over enough time, lose your money, right? Altcoins, Bitcoin, diversification, whatever. It was just very hard to feel the negative financial repercussions of trading badly because it's almost impossible. As long as you had some sort of crypto, right? You double, triple. I mean, just pure insanity. So it's good in that regard that your real kind of life isn't affected or adversely affected by the tuition you are paying from the market. But it's also bad, or it was a bad environment to learn because a lot of people thought they became traders, right? Or felt like traders simply based on the results they were getting because you're making a lot of money, you're technically investing, trading, whatever you want to call it, speculating, and you're seeing like an endless, whatever, year-long positive feedback loop. I mean, any person would think that they're amazing at what they're doing, even in the absence of a system or whatever else, and all of that type of stuff that we feel is very important now. So it's a very strange environment in which to kind of learn how to trade. I think there's a reason that even amongst some of our smarter colleagues who are still around today trading, etc., etc., everyone's got at least one story of just losing a lot and or giving it back from between kind of 2017, 2018, etc. I think there's a reason for that.
yeah. The way I kind of tried to avoid it and kind of avoid at least avoided some of the blowout uh, of like trading a different market was that I got kind of scared by the move up.
Mm-hmm.
So I mean I sold like pretty much all of it um, during like I mean this like during this kind of starting of the crash during like the before the old season actually topped. I started selling, and then I just did the same thing that I recommend now, where I was like, okay, I actually don't really have a clue how to trade or like how to trade this market when it's not going straight up,
Mm-hmm.
and then just trade it smaller size. And I mean that's worked really well for me. And then you can actually, even if you fuck something up, you actually have a lot of ammunition to get back into it. I mean, it's obviously. I mean, I don't know. Like some of you guys might have made a lot of money on this move up. I think that's the kind of same recommendation that would give for this kind of moves, where you're like, okay, I made a shitload of money, and I know a few people that have that just like long these when BitMEX was trading like 1K
Mm-hmm.
below index, and I just went all in, and it played out really well. I mean, it's always a good idea to kind of take some out and have some bullets on the side to be able to like even if something really really bad happens that you can get back in. Um, but yeah, I mean that's something that Lumda said I think when we had him on, where he was like, never lose never like even if you lose, never lose so much that you can't get back in,
Yeah.
because crypto gives you like usually gives you a chance to um I mean I don't know if he said it, but I mean he said it to me in DMs at some point. Crypto usually gives you an opportunity to make it all back, and I mean it's been the case pretty much since inception.
Yeah, it was
um
a very strange trend. I don't know how prevalent it is now, but I remember in 2017, people would kind of just hedge in and out with their full stack constantly on smaller moves. Do you remember that? That shit was really weird to me. It's like, well, why don't you just take some profit or, hedge a portion of it, etc. Like, one thing that never made too much sense to me, certainly back in that environment, but I think generally, is hedging absolutely everything or like your entire portfolio. And even at that point, hedging wasn't like people weren't using inverse futures the way you're supposed to hedge, etc. They would just be like all cash and then all Bitcoin type of thing or all in crypto. I just generally think that's a very weird thing to do. Because at that point, I think I don't know about you, but I think your psychology or one's psychology changes when you do
yeah
that type of shit, right? First of all, it's a tax nightmare. I agree with Bagsy there. But I think your psychology becomes fucked when you do stuff like that because you're out of the market. So you're going to be like mega bearish in the short term while you're out and like waiting for a nuke and wanting to get back in and vice versa. I just think with the amount of products that we now have available to trade and all these other opportunities, linear futures, inverse futures, fairly liquid options, etc., etc., I can't generally see the case to be just jumping all in, all out, or making really big swings with one's overall holdings. Do you have like strong views on net long exposure and just managing that generally? I know you talked a bit about hedging on
I,
Wednesday.
I mean, the thing is, like, if you're all in crypto, right? Like, I mean, I've seen a lot of people be all in crypto at
Mm-hmm.
14, 15, 16, 17K, right? Um, like, if you're all in crypto and it goes to, something crazy happens and it goes to, I mean, something, I can actually show this in the chart. You're all in crypto and something crazy happens, right? Something absolutely insane happens and you're all in crypto. You're just sitting there with your dick in your hand and you can't do anything.
Yeah.
Um, so I mean, it's never a good idea, even if you want to be all in, like if you want to have like the most long exposure that you could ever get, it's a bad idea to be all in because I mean, you're probably gonna get like these kind of moves. While they happen rarely, I mean, they happen, and if you don't have any kind of ammunition for that, um, I mean, you're not gonna be as long as you could be, for example. And
Mm-hmm.
even then, like, I don't think it's a good idea to kind of put all your eggs in one basket. It's just, I mean, if you're like, okay, this is a once in a generation opportunity, and you're just absolutely confident in it, I'm not gonna tell you to not do it, but I would say that it's a very, very risky thing at looking at things because I mean, I know I'm not smart enough to say, okay, crypto is going to be the world changer or not. Like, I don't think anyone is really. It's just going to be, we're going to have to wait and see, right? If it
Mm-hmm.
plays out like that, I mean, we're all going to be happy. But, like, is it like looking at, like, for example, if you look at America, like the legislation there, I mean, it's way too complicated and there's way too much stuff that could happen that could send this very low or very high. And I mean, it's just for me, if you're all in that kind of like in that kind of situation, and I mean, it's rich coming from me because I was literally all in during like this entire run up back in like end of 16, beginning of 17. So I mean, it's kind of
You've been
I
there.
yeah, I've been there. Like I've done it before. For me, the all in back then was just okay. If I lose it, it's fine. Like I was still. I mean, this is still years ago. I was still in my early 20s. Um, if that was gone, I mean, I would have heard. But I mean, that's fine, right? But opposed to that, some people came to me and were like at the top, or like in general, like close to the top. Okay, yeah, I've lost my house and stuff like that. I think that's just a stupid way to
Yeah,
go
it's
about
kind
it.
of terrifying. But it's always weird how that happens in the sense that especially with altcoins or like certainly more back in the day that we've seen some recent inklings of that, or even like a degen account, whatever medium you want to use, you get these really strange instances where you start off with an amount, you're like, well, I'm just gambling, it's my degen account, it doesn't mean anything, I'm just
Yeah.
having fun, and then it goes ape shit, and then suddenly it's like up 10, 20x, and you're like, wait, suddenly this isn't a degen account, and this is like a non-trivial amount of money now. You know,
Yeah.
that I've seen that happen a lot. It happened to me once with like a degen account. We all know how that ended. No comment.
I mean, that's what I said earlier, right? Easy come, easy go. I mean, if you turn like, and I think that's been the case pretty much for a lot of people during 16, 17. And I mean, I definitely remember the feeling when I sold. Like that was the worst, like literally the worst day of trading that I've ever had, feelings wise. Like I was
Mm,
sitting there sweating, shaking, like I was completely like questioning everything because I mean I got blasted by everyone being like, okay, this is just gonna go straight to the moon. And I mean I half like I wanted it to like I wanted to believe it, and then but I was like, this is not gonna happen. Sold, and that like that selling was literally the hardest thing, like financially or like in general, like one of the hardest things that I've ever done in my life. So I mean that was me kind of pulling the plug on like a degen account, right? Because my
yeah,
account was
yeah.
all the way up to that point. So I know it's really really hard, but I mean for me it played out hugely. So I think like if you kind of take like get one account, like, and that's so crypto if you think about
Oh,
it,
it's
like
super crypto,
can
yeah.
turn like a degen account into something huge. If you have that like happen to you, it's always nice to take some out and then yeah. But I mean that's just like taking profit along the way is always a good idea. And I mean if it goes higher, right? If price goes higher, I mean you still have money in your pocket in the end. Like, you might be mad that you missed out on some gains. And I mean, I was definitely mad at 20K because I sold before that.
Yeah.
I was like, okay, maybe I've just been the biggest idiot.
And this thing's about to double. Yeah.
Yeah. But it's like, in the end of the day, you're probably going to be happy that you secured. Like, in the end of the day, like, you're going to pay your groceries and your like rent and everything else
With Tron.
With yeah, with actual fiat money, right? Because I mean, be it for the case that you're like, okay, I want to keep my crypto, I don't want to spend it, or be it because it's just convenient. So I mean, having some of that, definitely a good idea.
Yeah, an unrealized P&L isn't P&L, right? I've got very strong views on like unrealized gains or paper profits, like all that type of stuff. It doesn't count, at least for me. Yeah. The amount of times I've seen traders let really huge, massive swings, whatever, massive P&Ls, flex on Twitter, just come back on them and then pretend it never happened, or just silently just take the break even or take the loss. Just completely unacceptable, right? Yeah. So, and I think that's the other part of the coin of kind of trading your P&L sort of thing. There's a reason why it's so looked down upon generally amongst the traders that I know, talk to, work with, etc. Not only because it's just bad practice and will make you make, on balance, worse decisions than you would otherwise, but because that money you see on the exchange that's green, apart from, social media entertainment or something, or making you feel good and all that type of stuff, it's not real until the position's closed, or you cash out, or you take profit, like synthetically or whatever else. Someone asks flood, ? No, I'm not making claims as to specific people. I just mean generally the idea of trading your P&L or feeling that something has materially changed because you see green on the screen. I've certainly been guilty of that. And I've almost got like almost 100% strike rate with whenever I send Donald either P&L stuff or just message him on Discord. Like if I'm in a long and I've typed to him saying Mega Moon or that's it, it's over, pack it up. That just tends to be the top or the bottom in the market. So I also think that's it's a pretty important point for people who care about. And this kind of comes back to the whole 2017 discussion with regard to, was it a good time or a bad time to learn how to trade for other reasons? It almost comes back to the point we discussed about the trading process, right? And how you could trade like a piece of shit and get a short-term positive feedback loop that whatever you're doing works because your account is growing. And then what tends to happen is you're actually trading badly, you're winning because that will just happen from time to time. And then the moment you choose to increase your bet size or you're convinced that your system works, etc., that's when you're kind of caught with your pants down. You know? So that's why, if anything, I try to get across in my trade management video and my content generally, how I talk about these things, is it's just care about the process and the system. And I generally, unless you're doing something really stupid or your system's completely just outrageous, if you have a good trading process that's based on kind of evidence, testing, good practice, blah, 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 the results sooner or later tend to follow. And when they do, they're actually sustainable. What you don't want to do is create a false feedback loop for yourself where you're doing something stupid, something in the short term, something that's probably not going to work over time. You think that you've kind of cracked the code and that's it, that's all you'll ever need. And usually, because the universe works in mysterious ways, when you get that level of conviction based off of like a untrustworthy sample size and you increase your bet size, that's when the market usually comes and takes that shit away from you,
Very well said. Fully agreed. I mean, we've all gone through it.
Oh, for sure.
It's not like this is like something that happens to someone.
But you need to go through it to understand it, right?
Yeah.
That's kind of the point I was making with all this kind of trading wisdom bullshit. They're like, oh, trade the trend, or oh, never use more than this much leverage, or, all of these like trading phrases which sound really cool. They only ever make sense and have some weight and do something for you if you have personal experience to relate it to. Only after you've been through, I feel, the meat grinder or some version of that trading wisdom yourself in a memorable way, only then does it mean something. If you tell a beginner like trade the trend, it's like, well, first of all, technically, what the fuck does that mean? What is the trend? On what time frame? How do we ascertain it? Like all of this bullshit. But even then, until they kind of blow out an entire account or half an account or get completely caught with their pants down with like a 5-6 trade losing streak, all because they didn't trade the whatever trend on whatever time frame. Only after that point will the trading wisdom make sense or have any weight. So it's like, it's cool to, and that's, I think, makes a general point about like trading education, trading books, trading webinars, seminars, whatever Socratic philosophy, TED Talk crap you want. It's only after, unless you're some prodigy savant, whatever, it doesn't matter. For most people, only living and hopefully surviving through those experiences is how they start to mean anything. Because otherwise it just won't have any weight. And I've been through that a lot. I thought I knew all the kind of fucking trading wisdom from reading, Market Wizards and all of this type of stuff. And then when you actually get your ass handed to you, you're like, that's what they meant. And at that point it's too late, but hey, there's no other way to learn.
Yep. I mean, it's just life in general, right?
Yeah.
I mean, you're always the moment you see something or like read something, you're like, oh, this is really easy. And then you actually take it in your hands, it's gonna be really hard. And I think, yeah, that's just the case with everything, but especially with trading. Completely agree. If you don't try it out, I mean, because it's like, if you actually just watch this, and I've had some real life friends that just like watch like a stream or like just check in what I do.
Mm-hmm.
They're like, oh yeah, you just buy whenever it hits a green line and then sell whenever it hits a red one. That sounds easy. Like I could do that. And I'm like, yeah, I mean, it's a little bit more to it. And even that, like if it's just that, like you buy like support lines and sell resistance lines. Even that is hard, right?
Yeah.
While the price is moving down, buying is, for anyone really, like for any beginner, it's actually hard to buy that. As long as you've not been conditioned to just buy every dip, like in the SPX, for example,
Yeah.
for weeks, months, years, really.
Forever.
But yeah, generally speaking, it's not really easy, even if it were as simple as just buying support, selling resistance. Even that is not easy to
Yeah,
do.
more often than not, if it looks simple, I mean, yeah, sometimes it'll look simple because the guy or the girl or the circle you're watching do it doesn't know what the fuck they're doing, so it looks simple because it's lacking in certain things. But certainly, if you're dealing with people who are a bit more experienced, the only reason it looks simple is because they've mastered or perfected it to some extent to only have the most relevant information presented to you or relevant to them, right? Like simplicity, like if something is intelligible or is comprehensible, that doesn't mean that the underlying concepts are easy, right? Or somehow lack depth. It just means that they've been stripped down to their kind of core elements as to make it understandable even to someone who might not know what's going on. Like you don't know the amount of other kind of testing, trading, and how many other indicators and boxes and lines or whatever system you use, just other artifacts have been removed to make it look as straightforward as it does. So I think more often than not, there's a large amount of depth to things that may look super straightforward. Like watching a chef, for example, cook a meal, right? Or like those chef tutorials from celebrity dudes, whatever. You know my YouTube search history now. But like you watch them do all this stuff and you're like, oh, this is like super easy. You just do the cutty here, heat this up, throw it in, mix it up. And then you try doing step 2 and you're like, oh my God, I'm so out of my depth. I think it's just as you said, applies to life.
Crypto Voy or something says conclusion, don't trade. I mean, that's not what we're saying. It's just go at it with a serious attitude or don't go at it at all.
Yeah.
Like if you're trying to do something for your job, right, which a lot of people are trying to do,
just treat it like one.
Treat it like one. Like sit there, actually take the time. I mean, I see Salsa is in the chat as well. I mean, for example, back in the day, we talked about this a lot, where he was just sitting at the screen for 12 hours a day. And that's how he got where he is now. And I think that's pretty much him taking it seriously. And I think that's kind of what we're trying to say.
Yeah, and that might look different for you, right? It could be studying, it could be more reading, it could be learning a certain skill, but the underlying premise of taking it seriously and approaching it with that type of mindset, I think, is still
because like the thing that everyone says, like it's easy, that makes it so that you don't actually think about it too much, right? If you're like trading is easy, like and you see this all over the place, then it makes you take it not serious. But if you're saying trading is hard, then you're gonna take it serious because I mean, if it's hard, I mean, it's worthwhile to do in my opinion. But I mean, you're gonna have to work for it.
Yeah, and
If
like
you,
worst case, if you approach it like super diligently, academically, and all of this type of shit, and it is actually easy, well then great, you haven't lost anything. You just get there quicker, right? You become proficient in a shorter period of time. So there's no downside to taking it seriously. If we are indeed idiots and it is actually easy, well you just get to that point where you're proficient quicker. Whereas if we are right and there is actually nuance, depth, complexity, and it's more difficult than it may seem, well then you're approaching it with the right attitude. There's no way to kind of lose if you take it seriously. And you know, perhaps the third way would be you figure out that it's not for you, and if you didn't take it seriously, you might have a regret that, okay, maybe this is harder than I thought and I should give it another year or open up another trading account, and you know, you'll have lingering doubts. Whereas if you approach it seriously and you find out that you're like maybe break even at best or slightly losing or whatever is just not for you, not for your personality, etc., well then you have clarity in that and you won't be coming back to it in with all the doubts and regrets in the world thinking, oh well, maybe I didn't take it seriously enough, let me try again. There's basically no downside to treating it with the diligence that it deserves, you know.
well said, well said. I mean, I like to get philosophical, but I think that's the case. Like that's why I love trading so much, because you can actually you learn a lot about yourself, and a lot of the trading wisdom that you learn along the way is true for your regular life as well, right?
Yeah.
If you take the stuff that you do in your life serious, you're gonna get good at it. And if you don't, you're just gonna stay at the same skill level that you've always been. I mean, that's how I approached. Like back in the day, I used to play a lot of video games. I've always approached them with a serious mindset. Like if I
do fucking nerd.
Yeah, I mean, if I do something, I want to be good at it.
I respect that.
And I think that's just something in general to kind of strive for. I know that like there's a lot of stuff that I haven't done it perfectly. Like, I mean, back when I studied, I could have taken that way more serious. And I mean, like Kret said, I still have regrets about that, just because, I mean, I never like, I'm not like, oh, I should have done this like better, but I'm like, oh, I could have done this better. And I really like, I should have taken it more serious. I'm not like, oh God, no, but I'm like, it's kind of sad that I didn't do it.
No.
And, that's just kind of my opinion on it. Like if you're trying your best, you're always gonna be happier in the end than if you're just
for sure
going at it with like whatever attitude. So
totally. It's a pretty good point to round up on, I think. A bit of a end up pretty serious and kind of somber, not so casual Friday, but that'll happen from time to time, I'm sure. And again, if you guys ever have any ideas or stuff specifically that you want us to do during the course of Casual Friday, again, guests are coming back reasonably soon-ish. Thank you to all the people who suggested guests. Most of them have been shit, so we're going to just keep going through our list.
Really terrible.
Yeah, really terrible suggestions, which is fine, you know. But yeah, if you have general ideas or recommendations or stuff you want to see for Casual Friday or the next one, leave it in the comments below. Thank you to Bybit for sponsoring Technical Roundup. Their links are also available in the description. Like the video if you haven't already. Shame on you. You've been here for an hour, 20 minutes, and you can't click one button. Definitely not the kind of diligence you'd want from a trader in development. And the final, perhaps, bit of news. As you may have seen, and again, links will be everywhere. We're going to start updating this as soon as our website is updated. But Technical Roundup, our previously subscription, paywall, super secret, just kidding, kind of got leaked everywhere, which was annoying, newsletter is now freely available. If you can just sign up and get Tuesday's issue now and receive it every Tuesday for free, all of that type of stuff. If you want to see the link to that, just go to Donald's Twitter, and it's one of his most recent tweets. The first link is to the newsletter itself, and the second link is the sign up. So go sign up to the mailing list so that on Tuesday, 8 p.m. UTC, you will receive Technical Roundup with all my terrible humor and the other stuff that comes with it. That's it from us. You will have the discomfort of watching me do technical stuff on Monday at 7 UTC, same time, same place. The Duck will be with you on Wednesday. Like the video, subscribe to the channel. Thank you to Bybit. Any final words, Duck?
No, not really.
Fantastic. Well, hope you have a safe weekend, and we will see you on the other side. Take care.
Bye bye.